Hey, what's going on, my friends? It's your man Adam Ace Spencer here with another M1 Finance Growth Portfolio Update. It's Saturday, May 21st, 2021. And as you guys can see right off the rip, over the past day, things were not looking so good, a little red, which unfortunately is the story across the board. And what I mean by across the board, I mean you can see the S&P 500 falls into bear market, joins Nasdaq, and the Dow is on its longest weekly losing streak since 1923. Okay, my friends, so don't think this portfolio of mine over here with our growth portfolio, where we contribute $25 every week, is off on its own. It's the only portfolio getting hammered. This is across the board. And I want to read this, just this section of this article to you guys. The stock market sell-off hit pause Friday, but the Dow Jones Industrial Average couldn't avoid its longest weekly losing streak in nearly a century. The Dow ended Friday 9 points higher, but finished the week down about 3%. This was its eighth straight weekly loss, the longest weekly losing streak since 1923. The long stretch of losses underscores the negative mood on Wall Street as investors grow nervous about high inflation and what the Federal Reserve will have to do to get prices under control. The broader S&P 500 posted its seventh straight weekly loss, which is the longest such slump since March 2001, and the S&P 500 briefly entered into bear market territory Friday, a 20% drop from all-time high it reached in January. So, again, our growth portfolio, unfortunately, it's not going to be some, off in its own world and be, immune to what's happening on the larger scale. No, because of, unfortunately, our growth plays are probably going to be hit more so than value companies and like our dividend portfolio, for example, because of the unknown, because of the unpredictability of what might come of this company that we have in our portfolio down the road in 5 years and 10 years, and so on and so on. Whereas the value companies we have in our dividend portfolio have been around and withstood these type of moments when the market has been down so bad. So this helps to explain why our growth portfolio might not be doing as well as our dividend portfolio. So if you're new to investing, if you are a beginner investor and you're following along with our, kind of our flow of things, our drip, so to speak. This isn't really a drip portfolio because we're not dividend reinvesting and whatnot, but we're doing an ongoing dollar cost averaging strategy where we invest $25 every week, regardless of how well or bad the market is going. So, my friends, right now, as you guys can see, our portfolio over the past day is down 2.94%. Over the past week, it's down 1.69%. Over the past month, it's down 37.25%. Over the past quarter, it's down 45.54%. In 1 year, which is the same as all time, it's down 71.94%, which gives us a current value of $834.32, a negative $872.40 gain. And this is, of course, meaning our stock prices are dropping as we've purchased them at higher points. And this is why we're taking this dollar cost averaging strategy, this approach, because if we threw all the money we had in it at one time when it was at the all-time high and it just tanked from there, we would be down actually even worse than where we currently are right now. So something to keep in mind, and why I like this strategy, because it's hopefully in the long run going to even out and allow us to have accumulated more shares while the price is down right now and end up growing a larger portfolio because of the growth that we expect to see from the companies we have in our portfolio. Now, some of you might be wondering, well, of course, it's going to depend on, the companies you have in the portfolio. So who do we have in here? And more specifically, how are they performing? Who's doing well? Who's not doing so hot? Well, right off the rip, you guys can see we have ChargePoint up here down 18.87%, followed by Nvidia down 33.04%, SEMrush down 38.01%, CleanSpark down 38.7%, Palantir down 68.29%, Bakkt Holdings down 70.98%, Coinbase down 88.74%, and DraftKings down 97.49%. Ooh, so brutal. So brutal. And I know some of you guys are like, I would have just stopped and I want to keep investing in them. Or do you really believe in them? And yes, I think, some companies, like Bakkt, for example, they're not as proven, for example, compared to DraftKings or Palantir or, the list. Everyone has kind of their flaws. But again, as a whole, right now, the market is getting killed. So we shouldn't really just be looking at our portfolio like, oh, it's just this. It's everyone across the board. That said, it is always, there's never a bad time to evaluate or reevaluate the companies you have in your portfolio. But just remember, it's at these times when people start kind of getting scared and worrying and, if we're going to be in a bear market, things are going to keep going down worse. Well, if you're going to need this money in the next year or 2 years, then absolutely reconsider your strategy and what it is that you're doing. But if you're not going to need it in that soon of a time, I would continue or consider continuing to stick with your strategy of just dollar cost averaging over the long haul. Whether it's 5 years, 10 years, whatever your thought is in that sense, it's, everyone's going to be different. But, if you have a plan and you it was vetted and you did your proper due diligence and you feel good about the plan, don't give up on it. And in this case, with this portfolio, again, we're contributing $25 every week, regardless of how good or bad the market is doing. And I'm not stopping despite the news that I just shared with you guys about the whole market as a whole. So this is just what I'm doing over here with my portfolio. This isn't legal or financial advice, of course, just entertainment. So I hope you guys are enjoying this entertainment, this show, because this episode is brutal. And for that, if you guys definitely do enjoy it, you can also smash that like button and subscribe to the channel if you haven't yet. Hit that notification bell so you guys can stay up to date on all of our latest and upcoming video content. But all right, my friends, you already know what it is. I gotta keep it moving, but I'll see you in the next video. Peace.